Hi, Larry Gaines, PowerCycleTrading.com. Well, the great thing about trading is that there's so many different strategies that you can incorporate. So what I'm going to show you here in this video is a pairs trade for what we call it kind of a pairs trade on a post-earnings potential trend breakout for Netflix. And then I'll show you another one for a pre-earnings potential breakout for CRM. So if you look at Netflix here, this is a really nice volatility squeeze. It's already had its earnings, and this has potential to break higher. So if it breaks higher, there's a good potential upside. But if we want to keep this to a certain extent neutral, what we can do is we can pair this. So we could go long Netflix and we could go short something that's correlated, such as QQQ. So here you can see Netflix on a weekly chart still has good potential upside. See, if it breaks this level here, that 378, this area, then it has potential to get back up to 420. Now you can see that QQQ's already had a huge move and seems a little extended here. So what we can do is we can match the potential for Netflix being stronger with more momentum, go long that and short QQQ. And even if the markets pull back, Netflix may not pull back as much. So there are 5 different ways you can actually make money. So here's what that spread looks like currently. So this would be the spread between long Netflix and short QQQ, but with the price difference, this will be short QQQ 2 times. Okay, so 1 by 2. So let's take a look. So on this hourly chart, you can see the spread is this line chart. So currently set this up earlier today at Netflix at 75 cents per 100 below QQQ. Okay, QQQ by 2. So this is 1 by 2 as far as the ratio. So the potential, is good, and you can play this rather than playing the outright on Netflix. You could play this spread. So even if Netflix stays strong and maybe QQQ pulls back or comes back, this will still be a potentially profitable trade. So this has potential to move back up to 16 over, something like that. So it has good profit potential. Now the next one is, this would be a post-earnings type trade because the earnings have already come. The next one is a pre-earnings to trend potentially into earnings with CRM. So you can see CRM is going to have earnings in mid-May, but nice wedge pattern here. We've got a volatility squeeze. So the momentum's starting to shift back up. So this has potential to the upside. And to keep this somewhat hedged, we could do the same. We could buy CRM, shares of CRM, and then go short something correlated like QQQ against it. So here you can see this is a weekly chart of CRM. It's got that wedge pattern. If this breaks, then potential for a nice pop slingshot up towards those prior highs. Going into earnings here, earnings will be in about 3 weeks. So a lot of times this one will trend into earnings, and this is one way to play that trend. And then you can see that QQQ's really kind of extended here, so it could just stall and be flat, churn sideways, etc. So this is one way to play that and be somewhat market neutral to the market. So here's what that spread looks like. So the spread is just starting to turn up. So this is CRM currently around $29 per share below QQQ, and you can see that the potential that this does have. You can see that it was up to, at this point, this was in February, it was only $9.86 per share below QQQ. So it has potential, good upside, and this is what you're playing, is that spread. So really doesn't matter if CRM just goes sideways and QQQ comes off, this can still be a winning trade. So a lot of different ways to make money using a spread. You basically have 5 different ways that you can make money. So a little bit more on that. So QQQ, you can see QQQ maybe comes off and CRM stays sideways or flat. You'd make money in that situation. Now, this is Netflix, hold on, it makes no difference, but so Netflix could go up, QQQ could stay sideways where it is right now, and that would make money. Or Netflix could go up, QQQ could go up, but Netflix goes up faster, you make money. Or Netflix could go down more slowly, and QQQ could come off a lot faster, and you make money. So a lot of different ways that you can trade and make money using pairs or spreads, and that's why hedge funds are called hedge funds, because a lot of their trading is done by these pairs trades. So if you'd like to learn more about this, a couple different opportunities, join us tomorrow night, Tuesday night, at the 23rd of April at 6 p.m. Eastern. There'll be a sign-up registration link there if you'd like to join us, and that's also for an earnings workshop. Or you can join us this Saturday for a interactive webinar on pairs trading. So a lot of different opportunities for you this week. Good luck.